Okay, hi guys. Today I'm going to talk about the stock market. And in the stock market, we can make a lot of money if we have a good idea and if we have the knowledge of the patterns of the stock market. So our main purpose is to make the money in the stock market. So how can we make the money on the stock market? It's simply by buying low and selling high, or selling high and buying low. So how can we reach our goal? To reach our goal, we definitely gonna need a strategy or idea which will save our times and works. So after we have an idea and the strategy where we will test that idea how much percentage it work by applying the best combination of the target and loss. So we came with the Jack in the Box strategy. So I'm going to explain how does it works. To meet the Jacks in the Box strategy, it has to be through the three conditions: the highest within the past 60 days, which is also called the expansion breakout days, and the longest trade in the past 9 days, and finally the inner days. After all those three conditions meet, we are going to open the trade after the inner days. To open a trade day, we have the highest of the first day, target loss. So after we open the trade, we'll set the target as well as the loss. On the structure and code part, I will explain how we implement those idea or the strategy Jacks in the Box, that how we implement on our programming. So Bigman stock simulator and the ETF simulator, and some of the both simulator and the stock simulator and the ETFs are the main for Java class that will do the core part to find the result or the patterns for the stock market. On the big man, we are creating the object of the simulator, stock simulators, that will runs the run method of the stock simulators, as well as in the stock simulator we will make the object of the symbol tester, which will test all those three conditions of the Jacks in the Box strategy and set the into date, direction, and into price and target and stop loss. So we'll do the same thing on the ETF simulators. Now let's talk about the patterns of the Jack in the Box that will follow the three conditions, and I will show you how we implement those three conditions in our pattern in our Java code. So the first condition is highest within the past 60 days. Here is the code that we are checking the highest on the past 60 days, and the longest trade that's been held in past 9 days, and finally the inner days. After all those conditions met, we are going to do the trades. So pattern high will check all those conditions and return true if the condition is met. Now after all those conditions met, it will display the outcomes. If the outcome is good, then we'll chill and we'll relax and we'll be happy. If not, then we lost the money and we'll be mad, we'll be angry. So after the trade opens, we'll save all those data on the outcomes longs, and after we open the trade, we're going to close on some points. If our target is met, and at that time we'll save our close date and the exit price. So after the trade is open, and we target each lower than the open date, then we'll close on the open date, and if not, then we'll close on the target date. So every data will be stored on those data types, and that will again go to the big man, and we'll simply store all those data on the trade arrays class, and we simply display those data. So in the result part, we'll analyze the long trades. It's buying on the small and selling on the high, and on the short sales we are selling those goods or the stuff in the high and buying small. Profit loss ratio is average profit wins by the average loss per trades. The higher the ratio, the better, as long as it is positive and it is win. A good result is when you have a high average profit. Holding period is most amount of time investment held by the investor. The important information is that the percentage winner must be higher and the holding period must be lower, as well as it will depend on the investor, and there should be the average profit of long should be depend on the how many trade we did. So here is the result we got after running those programs. The first time we get the bad result because the percent winner is so small, and which means we are not making any money and we are losing money. On the second result, we got percentage winner is higher, but the holding period is too long, so it will result so it will conclude as a bad result. The good result is we got the percentage winner is high, but again the average profit and the long trade and the average profit trades are not as close in value, but the average holding period is short. That make us the good result for our patterns. And to check our patterns it's working good or not, we take some previous data from the Bank of America and we compare those data, and it seems good. Okay, thank you.